Welcome to Within the Frame, where we bring the most pressing issues across the globe into focus. I'm Kim Mok-yeon. In a move that could redefine South Korea-U.S. trade dynamics, a long-awaited fact sheet on tariffs and security cooperation was made public this morning. The deal slashes U.S. auto tariffs on Korean vehicles, secures favorable terms for semiconductors, and signals a broader shift in bilateral economic priorities. Markets responded swiftly. Currency volatility eased, and attention turned to how this agreement could shape Korea's competitive edge going forward. But deeper questions remain. Can this momentum hold amid stock market instability, a wide gap in 2025 KOSPI forecasts, and the Bank of Korea's looming rate decision? For a closer look into the situation, we connect to Shim Myungkyu, an associate professor of economics at Yonsei University. A big welcome.
Thank you for having me.
And also joining us is Lee Hyun, associate professor of the KDI School of Public Policy Management. Good to see you.
Good evening.
So let's start our discussion with the big reveal of the fact sheet this morning, of course. Professor Shim, how do you evaluate the overall content of the document, and what's the broader significance of this whole deal?
Yeah, this seems to be a news that really relieved lots of people, including me, because it clearly lowers the uncertainty surrounding the trade uncertainty that we have faced so far. So let me directly evaluate the contents that directly affect our economy. First of all, closing the deal itself should be evaluated as a good sign for the economy. Heightened uncertainty, regardless of the way it is constructed or what it captures, has been robustly shown to have negative effects on the agreed economy. Tariff uncertainty, although I'm not so sure if it is fully resolved from what we have experienced so far, seems to become significantly lower with the release of the fact sheet. Second, it also fixes the tariff rate that the Korean automakers need to pay to the U.S. at 15%, which is equivalent to what other competitor countries should pay. Because automobile industry takes a great portion in the exports, it is also a positive signal to the Korean economy. Third, clarifying the upper bound of the investment fund would also be a positive signal that can relieve the concerns on the exchange rate market. Korean won has lost its value over the several months, and especially during the last several weeks. And the deal open to the public today may relieve the concern that there might be possible capital outflow from South Korea due to the fund.
So we're really going to be curious how to see this deal. How will it reflect the overall direction of the trade between the two countries? Now let's delve a little bit deeper into each sector. So first, the auto sector. Korea's 25% tariff on car exports to the U.S. will be reduced to 15%, and the domestic industry has welcomed the move, but some point out that Korean vehicles, once enjoying the edge of the Korea-U.S. FTA, will now compete on equal footing with Japanese imports. Professor Lee, what kind of strategic adjustments or policy support might be necessary going forward?
Yeah, as you said, although the tariff cut is positive for Korean automakers, it also means competition will remain very strong since Japanese brands will now receive the same treatment. Going forward, I see three strategic directions. First, diversification, expanding exports beyond the U.S. to Europe and Middle East and emerging markets to reduce dependence on any single region. And second, upgrading to next generation AI-powered vehicles. For instance, strengthening capabilities in software, autonomous systems, and EV platforms is where long-term competitiveness of automakers will be decided. And third, policy support. Actually, the government today announces the support packages, including a 20% increase in EV vehicles subsidy next year and policy finance exceeding 15 trillion won for parts suppliers, and also there's a guarantee programs. I think together these steps can help Korean Korean automakers maintain competitiveness in a tougher global market situation.
Right. So, though it's a relief for the auto industry in general, there should be some supportive policy measures adjusting to that. Now, let's turn to semiconductors as well. So, Korea secured the most favored nation treatment and reached terms that are seen as competitive. Yeah. So, with specific tariff rates not yet disclosed, what key variables should the industry be keeping a close eye on? Professor Shim.
Yeah, first of all, it seems to be another good news that Korea has secured the most favored nation treatment. But as you just pointed out, there are several factors that the industry needs to focus on. First of all, I want to say that the industry needs to closely track the relationship between the U.S. and China, because the U.S. might put more pressures on the Taiwanese government if it wants to improve the relationship with China, and given that Taiwanese semiconductor firms are the most important competitors in the global market, the industry has to keep close track what they respond to such a situation. Second, it also needs to closely look at the state of the U.S. economy, because the memory chips are now widely used in most of the manufactured goods. Imposing too high tariff rates on the memory chips would further raise the price level of the final goods sold in the US market. And the problem the US economy potentially encounters is higher inflation rate in the very near future, because the pressure on the importing firms to raise the price of the goods that they import from outside becomes greater over time. So this factor would prevent the US government to put too high tariff rate on Taiwan, Japan, and Korean semiconductor firms, which also potentially benefit the Korean firms.
Then, speaking more broadly now, beyond these headline items, Professor Lee, what other noteworthy trade elements stood out in the released fact sheet?
Beyond the headline items, one important point is Korea's $200 billion of investment in the United States. And this scale of outward investment has clear macro implications. The government will need to mobilize substantial foreign currency resources, which increases dollar funding needs and can put pressure on the won in the very near term. And it also deepens the country's exposure to global dollar funding conditions. And second, there are meaningful reductions in non-tariff barriers across both automobiles and agriculture, effectively giving U.S. producers greater market access into Korea. Finally, the section on digital trade is particularly significant. Both countries committed to ensuring that U.S. digital service companies are not discriminated against, especially in areas like network usage fees and online platform regulation. This reflects a shift in trade policy towards digital rules that directly affect big tech, cloud services, and data-intensive industries for both countries.
That's a good point. Now, Professor Lee, let's shift a little bit to the domestic financial market as well. So the $1 exchange rate, often cited as a source of instability, has slightly dipped following verbal intervention by foreign exchange authorities. Some analysts believe the announcement of the fact sheet itself could serve to kind of temporarily ease the exchange rate as well. What's your take on that view?
So there might be a temporary easing effect because of the announcement, and this is because it removes some uncertainty around the trade deal itself. Markets generally react positively when policy uncertainty declines, so in that sense, the fact sheet can provide a short-term stabilizing signal for the won. But beyond that initial reaction, the FX implications are more complex. The fact sheet includes clauses acknowledging the potential impact on Korea's FX market stability and sets an annual $20 billion cap on dollar funding. And it also states that Korea will try to secure dollars without relying on market purchases. And this mechanism is important, but in reality, sourcing that amount of foreign currency smoothly is not a trivial task. And the broader issue is more structural. Even without this deal, Korea's outward investment and also households' growing purchase of US stocks have been increasing dollar demand, while foreign investors have recently been net sellers of Korean equities and bonds amid a weaker won. So I think the medium-term pressure on the won comes from broader capital flow dynamics rather than today's announcement.
Right, so a lot of factors are in play with the situation. Now, let's also take a look at the stock market's reaction. The KOSPI continues to hover around 4,100 mark with limited gains despite the resolution of the U.S. government shutdown. Professor Shim, why is the market reacting so cautiously?
Yeah, the most important reason for that is that there are mixed signs about the future state of the Korean economy, which makes stock market participants hesitate to invest more aggressively. First, while the resolution of the US government shutdown is good news, it is not fully resolved. The agreement between the two political parties in the US is temporary, so there still is a possibility that the shutdown will resume again. Second, while the tariff agreement fact sheet was released today, which really relieves a concern on the trade side, we have seen cases where such an agreement is not fully respected by the US government. Third, concerns over the inflation rate, as I just pointed earlier, become greater over time. Inflation rate measured by CPI rose 2 consecutive months. It was 1.7% in August, but was 2.1 and 2.4% in September and October, respectively. This implies that the Fed or the BOK might not easily lower the target interest rate, which is another negative sign that makes people not to be too positive about the Korean economy.
So a cautious stance we're seeing at the moment. Now, at the same time, there are also concerns about rising volatility as well. As the KOSPI climbs, there's growing unease about price swings. And the KOSPI volatility index, in fact, is now back to levels seen this past April when President Trump first announced the reciprocal tariffs. Professor Lee, how should we interpret this situation?
So actually in April, the spike in volatility was rather a short-lived reaction to trade uncertainty following the President Trump's announcement. And what we're seeing now is a bit different. The KOSPI volatility index has stayed above 30, a level well above its historical average from mid-October, and has only eased slightly recently. And it suggests more persistent sources of uncertainty this time. And part of this comes from the AI-driven rally, where rapid price gains tend to trigger profit-taking and make the market more sensitive to the sentiment. And there is also lingering policy uncertainty, including debates over corporate governance reforms in South Korea, which investors are watching very closely. And as index climbs, some investors are locking in profits, which naturally increases that day-to-day volatility. So overall, it reflects a mix of various factors rather than a single shock these days.
Complex situation we're seeing. So let's zoom out a little bit, Professor Lee, to the bigger economic picture. So there's growing sense that Korea might finally move past the era of a near zero growth. And the KDI has revised its 2025 economic forecast upward to 1.8% from previous 1.6%. What's your perspective on this upward adjustment?
This upward revision mainly reflects improving momentum in the semiconductor sector, both in production and investment. They're recovering faster than expected and supported by the AI-related demand. Also, private consumption has been improving this year, supported by the accommodative monetary policy stance and boost from government's consumption vouchers. Given this trend and the next year's fiscal plan set to be very expansionary relatively, domestic demand is expected to remain on a gradual recovery path. but risks are still there. Construction investment remains very weak, and the trade effects from the recent tariff changes will only begin to materialize next year, adding downward risk to the outlook. So overall, Korea appears to be moving out of the near zero growth, but the recovery is still modest and depends on how key risks unfold.
Right, so we could look forward to some mild growth next year, but we'll still have to keep close tabs on the risks. Now, lastly, before we let you go, a very important decision looms. On November 27th, the Bank of Korea is set to make its final base rate decision of the year. And Governor Lee Chang-yong recently told foreign media that the central bank may change the direction of its monetary policy. Professor Shim, what is your forecast?
Yeah, so let me first clarify what he meant by shifting the direction of the monetary policy. The target interest rate has become lower by 1 percentage point during the last year. While it has been stable at the current 2.5% for the last several months, the stance of the BOK was to conduct an expansionary monetary policy. So what it implies is that the BOK would change its stance to conduct a contractionary monetary policy by raising the interest rate. This seems to make sense to me because if you think about the current state of the financial market or the agreed economy, as what he talked to the foreign media makes sense. First, the exchange rate has become too high during the last several months. If the BOK lowers the target interest rate, there might be a massive capital outflow because the interest rate gap between Korea and the US might widen. So it will put additional pressure on the already weak Korean won. Second, as I have already pointed out earlier, there is an upward pressure on the inflation rate, both in the US and also in Korea. And the changes in the stance of the BOK seems to be necessary at this point because policy affects the agri economy with some lags.
Right. So definitely, it's very necessary. And as we head towards the end, year's end, excuse me, it feels like both policy and markets are standing at a crossroads, and we'll have to keep close eyes on the latest developments, of course. Professor Shim, thank you so much for your insights.
Thank you.
And of course, Professor Lee, we really appreciate it.
Thanks very much.
And that'll be all from us on Within the Frame tonight. Be sure to tune in again next time as we continue to explore the stories that matter. Till then, stay informed and engaged.